Joining us now in an exclusive interview, former Treasury Secretary Jack Lew. Secretary Lew, great to have you again. Welcome back.
Good to be with you.
You think the Fed can pull it off, fighting inflation all the way back down without taking us into recession?
Look, I think it's a hard job. The history of rate increases to get things back to normal certainly makes the odds of there being some bumps along the way pretty high. But I do think that the way the Fed has managed since the beginning of the COVID crisis should give us all some confidence that they're going to be moving step by step, watching what the impact is, trying very hard to avoid the kind of hard landing that would be very painful. There are a lot of things going on in the world right now that they don't control. Some of those are contributing to making it much harder. But they're on a path. They've been clear in communicating it. And I think the road ahead is going to create uncertainty and volatility. But I certainly hope that they can at least be bumpy and not hard.
Where do you see inflation going? Do you have a forecast of when, in your mind, you think it's going to peak and come down, given the Fed's fight and all of these supply chain issues, the war, everything that's contributing?
I think you have to break inflation into multiple parts because the general direction of the economy, the demand in the economy, growth in the economy will be affected over time by what the Fed does on interest rates. But that's not instantaneous. When you see things like oil supplies, shutting down because of a war and prices spiking, that has a much more immediate impact. So I think you can see in some parts of the economy signs of inflation settling down. The last month's jobs report showed, a much lower wage increase than we'd seen in the past. 1 month's data doesn't prove where it's going, but it was a good sign. Things like used car prices, they're going down, not up. There are other things that are still feeling upwards pressure. So the things are going in both directions. Everyone I talk to expects that over the course of the year there will be a substantial settling down. But I don't think it will be back to normal by the end of the year because the world has changed and it's going to take a longer to get there. I think that one has to look beyond the kind of immediate 6-month period ahead and say, where is it going to settle down afterwards? There does seem to be a risk that it's going to settle down higher than many of us would have liked to have seen. And if so, that will mean that the Fed will have to keep looking at what do they need to do over the longer term. I think they've been right to move gradually because we don't know that that's the case. And they do know that if they move hard and fast, they can trigger a recession. They're trying to thread a needle.
Meantime, it's a midterm election year, and this is becoming very political. It's the #1 concern right now for Americans, as I was alluding to. And there's a lot of blame, the blame game, on who is most responsible or responsible, at least, for inflation. I just wanted to get your take on something that President Biden tweeted out and then got some blowback from one of the richest people in America, Jeff Bezos. So the president tweeted, "Want to bring down inflation? Let's make sure the wealthiest corporations pay their fair share." Then he got called out by Jeff Bezos, who said that the newly created disinformation board should review this tweet or maybe form a non sequitur board instead, because raising corporate taxes is fine, taming inflation is critical to discuss, but mushing them together is just misdirection. And I'm curious who you side with in that debate.
Well, I don't participate in Twitter debates, never have, and probably never will. I think that the causes are complicated. I think that when you look at what we need to do in this country to address some of the problems that are not necessarily contributing to inflation, but are making it harder for families to deal with the inflationary pressures, we have to figure out how to pay for that. So you take something like increasing the availability of child care credits, having families have access to refundable tax credits, things that really get right to the bottom line of families, some of them middle class, some of them down near the poverty line. You have to pay for those things. And one of the ways to pay for them is through some of the tax proposals. So, I'm not sure I would make it a cause and effect.
Sure, but that's not how you, I get it. I get it. But raising corporate taxes and taxes on the wealthy doesn't bring down inflation. But I think your point is interesting because I know you recently wrote an op-ed on making the child tax credit permanent with another former Treasury Secretary, Secretary Rubin. And my response to that was, doesn't that just increase more spending right now at a time where we're already dealing with inflation? Why would you inject more into the economy?
Look, as the point we made in that piece that we wrote is that if you more than pay for it, even though families that have low incomes are likely to spend at a higher rate than those of us with higher incomes, you're reducing the deficit by more, and net, it's not going to be inflationary. So it is a question of whether your fiscal policy reflects where you are at the point in the cycle. At the moment when there was a global health crisis and we just had to make sure that when you shut down the economy, things could come back, no one asked what did it cost. Now it's right to ask what does it cost, and paying for it is the way for it not to be inflationary.